If you missed Palantir, if you missed Nvidia, stop kicking yourself, because I'm about to show you something bigger than both of them, and almost nobody is talking about it. Not the YouTube finance bros, not the guys on CNBC, nobody. And I get why it's not sexy, it doesn't have a cool logo, it's not a chatbot you can play with on your phone. But here's the thing about making real money in markets. The boring stuff is usually where boring people get rich, and the exciting stuff is where everybody else loses their shirt chasing a headline. I've built companies, I've sold companies, I've sat on that Shark Tank stage and watched thousands of pitches, and I can tell you the pattern never changes. Everybody shows up late to the party that's already loud, and they walk right past the party that hasn't even started yet. So that's exactly what's happening right now with AI. And by the end of this video, you're going to see where the next wave is actually building, not where the headlines say it's building, and not where your cousin's crypto group chat says it's building either. Now, before I get into it, I want to give you something. This is going to take real time to explain properly the numbers, the companies, the reasons behind all of it. So I need you to do one thing for me right now. Hit subscribe. I'm not asking for a favor. I'm handing you research that would normally cost you real money if you paid a firm to put it together. This is the kind of stuff hedge funds pay analysts 6 figures a year to dig up. You're getting it for free, sitting on your couch, in your pajamas, whatever. All I ask in return is you subscribe. So this actually reaches people instead of getting buried by an algorithm that would rather show you a guy dancing, fair trade. Let's go. So let's talk about why everybody's looking in the wrong place. When people hear AI stock, their brain goes straight to chips. Nvidia, maybe AMD, maybe some random software company that slapped AI into their earnings call 50 times just to pump the stock price for a quarter. And look, I get it. Chips matter. Nvidia earned every bit of that run. No argument from me. But here's what almost nobody outside the industry understands. Chips are maybe a third of this story, a third, and the other 2/3 is stuff that doesn't trend on Twitter because it's not glamorous. Somebody has to pour the concrete. Somebody has to run millions of feet of cable through a building the size of a small airport. Somebody has to generate enough electricity to power a mid-sized city just for one data center campus. Somebody has to make sure that when you connect trillion-dollar AI systems to the internet, some kid in his basement halfway around the world can't just waltz in and steal everything overnight. None of that is exciting. None of that gets you likes on social media, but all of it is mandatory. You cannot build an AI system without it, period. Full stop, no exceptions, no shortcuts. I've said this in business my whole life, and it's never once let me down. When there's a gold rush, the smartest money isn't panning for gold. It's selling picks and shovels. Everybody digs, but only a handful actually strike gold. The guy selling the shovel gets paid either way. Win or lose, boom or bust. Right now, the biggest tech companies on the planet, Microsoft, Google, Amazon, Meta, are spending an amount of money on AI infrastructure that honestly sounds made up when you say it out loud. We're talking hundreds of billions of dollars this year alone, and estimates for next year push past $1 trillion. $1 trillion. That's more than the entire economic output of most countries on Earth combined in some cases. And when that kind of money gets spent, it doesn't just flow into one place, into one chip company. It ripples through an entire supply chain, layer after layer after layer. And most of that supply chain is completely invisible to the average investor because nobody's making viral videos about power substations and fiber conduits. But I promise you, the people actually building this stuff are getting paid, and paid extremely well right now, today. While you're sitting around waiting for the next Nvidia to show up in a headline, somebody else already made money off of. There's a bottleneck happening right now that almost nobody talks about, and it's not chips, it's power. I mean that literally, electricity, the stuff that comes out of the wall. There are well over 100 massive data center projects underway right now just in the United States. And the limiting factor increasingly isn't how many GPUs Nvidia can crank out of a factory. It's whether there's enough juice on the grid to actually run them once they're installed. That is the real constraint. holding this entire industry back. And when I hear that, my business brain doesn't think cool technology. It thinks who gets paid no matter who wins the AI race. Because here's the truth about picking winners in tech. You don't actually know who wins. I don't know if it's going to be OpenAI or Google or some company that doesn't even exist yet. Nobody knows. And anybody who tells you they know is selling you something. But I do know that whoever wins, they're going to need a building, they're going to need power, and they're going to need it all wired together properly. That's not a bet on a single winner. That's a bet on the entire game being played at all, which is a much safer bet, if you ask me. And it's how I've approached every single investment I've ever made. Let me give you a real-world example of how I think about this, because it's not theoretical for me. Back when I sold broadcast.com, everybody thought the money was in the content in the streams themselves. But the smartest operators I knew were quietly buying up bandwidth and server capacity because they understood that no matter which content company won or lost, somebody had to move the data. The same exact pattern is playing out right now with AI, just on a much bigger scale with much bigger numbers attached to it. History doesn't repeat exactly, but it rhymes. And right now, it's rhyming loudly if you're willing to listen. So think about the companies that build that physical backbone. Construction firms that specialize in the electrical work and site prep for these massive data center campuses. That kind of work isn't glamorous. It's literally pouring foundations and running conduit through mud in the middle of nowhere. But when a segment inside a boring, unglamorous construction company suddenly starts growing revenue by double and triple digits because every hyperscaler on earth needs them yesterday, that's not hype. That's just math. And the beautiful part about construction contracts in this space is they're locked in ahead of time. When a company signs a multi-billion-dollar backlog to build out these projects, that's not a hope. That's not some analyst's rosy projection. That's signed a paper sitting in a filing cabinet somewhere. The revenue is coming because the contract already says so in black and white. In a world full of speculation and vibes-based investing, that's about as close to a sure thing as the stock market ever gives you. Then there's the power generation side of it, which is a completely separate opportunity that most people never even think to look at. These data centers need dedicated power plants, often built specifically to serve them. And there are smaller companies out there quietly building gas-fired plants that are already contracted directly to campuses that don't even exist on the ground yet, but will in 18 months. I look for one thing above almost everything else when I evaluate any business, and that's cash flow, not revenue, not growth for growth's sake, not some story about a total addressable market slide in a pitch deck cash, a company that turns a huge chunk of every dollar of revenue into actual free cash sitting in the bank with little to no debt weighing it down. That's the kind of business I would want to own myself if I could write the check today. When you find that combination in an industry growing this fast with a backlog of already signed work locked in years, you're not gambling, you're investing in something close to inevitability. And here's the part that really gets me excited as a business guy, not just an investor. These companies aren't burning cash trying to invent something new and unproven. They're doing something they already know how to do, building, wiring, generating power, just at a scale and pace nobody's ever asked them to do before. That's a huge difference from a biotech company betting everything on a drug trial, or some startup betting everything on an app nobody's proven wants to pay for. This is proven engineering, proven execution, just aimed at the single biggest infrastructure build-out of our lifetime. Low technological risk, massive demand, tailwind. That combination is rare. And when I see it, I pay attention every single time. No exceptions. Now let's move to the part I call the plumbing of AI, because this is where it gets a little more technical, but stick with me, I'll keep it dead simple. You know those massive, insanely expensive chips everybody talks about? They don't work by themselves. They work in giant clusters, thousands of them wired together, constantly talking to each other at ridiculous speeds, back and forth, nonstop. Here's the part nobody tells you. It doesn't matter how fast your chip is, if the connection between chips is slow, the whole system moves at the speed of its slowest link, no faster. Think of it like this. You can have the best chef in the world working in the best kitchen money can buy, but if the pipes are clogged, nothing's getting cooked, nothing's coming out of that kitchen. That's exactly the hidden problem in AI data centers right now, and there are companies quietly solving it that almost nobody outside the industry has ever heard of. One piece of that puzzle is high-speed connectivity, the chips and cables that let all these processors talk to each other without bottlenecking the entire system into a crawl. When you see a company's revenue triple in a single year, going from a few $100 million to well over $1 billion, and their profit margins sit up around software company levels even though they're building physical hardware, that tells you something important. That tells you they've got real pricing power. Nobody's undercutting them because nobody else can build what they build, at least not yet in business. That's called a moat, and it's one of the single most valuable things a company can possess, because it means competitors can't just show up next quarter and steal your customers by slashing prices. The other piece is power delivery. Right down at the chip level, these AI processors are power-hungry monsters, genuinely gluttonous, and you can't just plug them into a regular wall outlet like a toaster. You need precision power delivery, the exact voltage, the exact current, timed perfectly down to the microsecond for thousands of chips running simultaneously in the same room. There are small, highly specialized companies solving exactly that problem, and when you see their margins running well above 50%, for context, that's higher than most car companies, higher than most industrial manufacturers, higher than almost anybody building a physical product on this planet. They built something genuinely hard to replicate. That's not a fluke. That's a real technological edge. And edges like that tend to get rewarded by the market over time, not overnight, but over time. I actually think about this a little bit like owning a basketball team. Believe it or not, everybody wants to talk about the star player, the guy scoring 30 points a night. That's your chip company. That's your Nvidia. But championships get won by the role players. Nobody's talking about the guy setting the perfect screen, the defense that nobody notices until it's shutting down the other team's best scorer. The connectivity and power delivery companies are those role players. They don't get the highlight reel, but you cannot win the championship without them. Full stop. And smart owners, smart investors, they pay attention to the whole roster, not just the guy on the poster. Now here's the third piece. And honestly, this might be the one that matters most over the long run. AI doesn't just need to be built. It needs to be guarded constantly, like a vault. Think about what's actually happening across corporate America right now. Every major company on the planet is connecting their most sensitive data, financial records, customer information, trade secrets, everything to these AI systems. And it's not just humans logging in and typing anymore. We're talking about AI agents, software that can log into systems on its own, pull data, take actions, send information, all without a human ever clicking a single button. So somebody has to answer a very basic, very old question in a brand new context. Who's allowed to access what, and how do you stop a hacker from hijacking an AI agent and walking straight out the back door with everything you've got? This is a security problem, unlike anything we've really dealt with before. And the companies solving it for identity and access management are sitting in an incredibly strong position. Whether people realize it or not, when your product becomes the layer that decides which AI agent can touch which piece of data, you're not optional. You're mandatory infrastructure. The same way a lock on a bank vault is mandatory, not a nice to have. And there's a second piece to this whole puzzle. Digital forensics, the tools that let investigators, law enforcement, and corporate security teams figure out exactly what happened after a breach or a crime involving digital devices. As AI gets embedded into every phone, every app, every single communication we send, investigating anything digital gets exponentially more complicated, and that requires increasingly sophisticated tools built specifically for that job, not off-the-shelf software. Small companies doing that well with strong margins and real government and enterprise relationships built over years tend to fly completely under the radar of retail investors chasing the next hot chip stock. And that, to me, is exactly where opportunity likes to hide in plain sight. And don't forget, governments are going to force this issue, whether companies like it or not. Every time there's a major AI-related breach, and there will be more of them, regulators are going to step in and demand proof that companies actually control access to these systems. That's not a maybe, that's a win. So I've dealt with regulation across pretty much every industry I've ever operated in, and I can tell you regulation almost always benefits whoever's already built the compliant solution before the law shows up demanding one. The companies solving identity and access for AI right now aren't just building a good product. They're building the thing regulators are eventually going to require everybody to have. That's about as close to a guaranteed tailwind as you get in business. Now let me be straight with you, because I always am. Even when it's not what people want to hear, none of this matters if you don't know what to do once you actually own it. I've watched people make the right call on a stock, get in early, watch it run up huge, and still walk away with less money than they started with because they had absolutely no idea when to sell. That's not a stock picking problem. That's a discipline problem. And it's the single most expensive mistake I see regular investors make over and over and over again, year after year, cycle after cycle. The strategy that built your parents' generation's wealth. Buy good companies, hold forever, don't think about it, check back in 20 years. That world is basically gone now. Wall Street doesn't move on quality the way it used to decades ago. It moves on momentum, on where the money is flowing right this second, and it moves fast, faster than most people can react if you're not paying attention to where capital is actually rotating. You will get left holding something that used to be exciting while the smart money has already moved 3 steps ahead of you and is on to the next thing. I've made this mistake myself earlier in my career, and I'm not too proud to admit it. I held on to positions way longer than I should have because I fell in love with the story instead of respecting the numbers. In front of me, it cost me money, real money, and it taught me a lesson I never forgot. The market doesn't care how much you believe in a company. It doesn't care how good the story sounds at a dinner party. It only cares about where money is actually flowing right now. Today, this week, the sooner you separate your ego from your portfolio, the sooner you start actually making consistent money instead of getting lucky once and giving it all back over the next 2 years, chasing that same feeling. So what do you actually do with all this information I just gave you? You watch the fundamentals, not the noise, not the comment section, not your group chat. Is the industry actually growing? Or is it just trending on social media for a week before everyone forgets about it? Is the company you're looking at actually the best in its space? Best margins, strongest backlog, real free cash flow? Or is it just riding the wave without doing any of the actual work underneath it? And is the stock actually confirming that story by trending in the right direction? Or are you trying to be a hero and catch a falling knife because you think you're smarter than the entire market? Those 3 questions, asked honestly every single time before you click buy, will save you more money over your lifetime than any hot tip ever will. Guaranteed. I built my career and frankly my fortune on not falling in love with the story and instead paying attention to the actual business underneath it. The boring numbers nobody wants to read, that discipline is boring, I'll admit it. It doesn't make for a great highlight reel, but it's the difference between building real, lasting wealth and being the guy at the party years from now bragging about the one that got away. One more thing before I let you go, because I think it matters more than people realize. The window on opportunities like this doesn't stay open forever. Every cycle I've lived through, and I've lived through a lot of them, the early money moves in quietly. Then the crowd shows up late and pushes prices to places that stop making sense, and then the whole thing corrects. Where you are in that cycle matters enormously. Right now, with this specific corner of the AI build-out, we are still early. Not get in tomorrow or you missed it early, but early enough that the fundamentals still make sense, which is exactly the window I want you paying attention in. Here's my challenge to you, and I mean every word of it. Don't just watch this video, nod along, and move on with your day like you always do. Go actually look at these industries. I just walked you through the physical infrastructure builders, the connectivity and power specialists, the security and forensics companies quietly sitting behind the scenes. Do the boring work of checking whether the fundamentals actually hold up before you put a single dollar in, because I am not your financial advisor and I am not telling you what to buy. What I am telling you is where I genuinely believe the next decade of real wealth creation is quietly happening right now. While everybody else is still arguing online about whether Nvidia is too expensive, drop a comment and tell me which one of these industries surprised you the most. Because I want to know how many of you actually get this and how many are still chasing yesterday's trade. Share this with somebody who's still looking backward instead of forward. I'll see you in the next one.